There's a lot of houses for sale.
There is a
lot of houses.
A lot of inventory.
A lot of inventory.
And I think I just saw a stat yesterday stating that we've had
Welcome, everybody, to another episode of On the Couch, where we dive into financial literacy, entrepreneurship, and sometimes we have a guest. Today, we got a really cool episode. I'm Johnny Supa. I'm one of your hosts, and we're here with
Danny Cardozo.
Danny. How you doing, man? You know what's funny is sometimes we sit 4 feet from each other and we barely say anything for a whole week sometimes. I mean, we talk a lot, but we don't like this is why the On the Couch is really good, because we could talk about topics like this. Like today, we're going to talk about
Reverse
mortgages. So again, I have my notes in front of me, and
So let's hold on a second. Let's slow it down a bit.
we got to get to business. We got time.
No. We gotta say one thing. The weather's starting to warm up.
Yeah.
Does this mean that the market reflects on the weather?
Usually March is that month where the market picks up
And it didn't.
and there's a boom.
Yeah.
And I feel like, I don't know. I mean, we had a lot of closings in April.
But the boom has yet to come, I guess.
I just don't feel like it has really picked up. Like when you drive by the neighborhoods, there's a lot of houses for sale.
There is a lot of inventory.
A lot of inventory.
A lot of inventory.
And I think I just saw a stat yesterday stating that we've had the most price drops ever recorded
Really?
on homes for sale.
Yeah, but there's two reasons for that. One is because, the listing wasn't priced accurately the first time, right? People are still living in 2022. They're thinking
Fair.
about so
I mean-
that's reasons right there. Your house is not selling because you're overpriced. There's buyers out there.
There are 100%. My pre-approval clients, I have a lot of them right now.
Yeah.
That are just sitting there, and I touch base with them every week or two just to see, how did the weekend go for you guys while you guys were out looking, and they just not
A lot of options.
not pressing the go button.
Yeah.
Well, let's
that'll
press the
come.
go button on this episode now.
All
Talk to
right.
me.
Yeah. So we're going to talk about reverse mortgages, and
Pretty much because it's in high interest.
well, most retirees, more retirees than ever, are exploring reverse mortgages.
Yeah, and one of the biggest reasons for that is they've gotten a lot of equity in their property.
And they got a lot of rejection at the banks,
That too.
right? So
They're not making enough income.
they're not, CPP and OAS is not enough to cover or qualify for a traditional line of credit anymore. You can't even get a mortgage at the bank. So today we're going to break down what a real reverse mortgage is, who are they for, and how you can use them strategically, not desperately,
Exactly.
right? So what is a reverse mortgage?
A reverse mortgage is a mortgage put in place that allows you to pull the equity out of your property without having to make a payment.
Okay. And it allows homeowners to turn part of their home into cash.
Yeah, so I
That's
mean,
the-
you can utilize a reverse mortgage in many different situations. You can qualify yourself, get yourself approved for a reverse mortgage, and not even use it. Right? You're not going to pay for it. It's not going to cost you anything. You could, pull a lump sum that you need today. For instance, you want to gift some cash to a family member. Maybe they're looking to purchase a home and you want to help them out. You could get qualified for a certain amount. Only take a small lump sum of it now. Or you can take the whole thing.
So flexible payout options. So take out a lump sum, set monthly payouts.
You could even set it up that It's like a paycheck,
Yeah.
like you're working
So you
almost.
can set monthly payouts
Yeah.
and use it like a line of credit.
Exactly.
So you can access credit in the home without having to sell the house. You can boost your retirement income to use it to cover day-to-day costs,
Yep.
right? So healthcare, home upgrades, gifted funds for your grandchildren or somebody who's getting married, or you want to help out your kid. You know, some, like, to be honest, a lot of these boomers, if they had back then, you know, these families had 3, 4 kids.
Yeah.
So the youngest is at that age now where my parents are retired. For instance, if I'm the youngest, right? My parents are retired. They don't have the substantial income that they used to have, and life's gotten more expensive. So they need to gift me, whether I'm getting married or they want to gift me money for my first down payment. Where are they getting that money from? And this is why a lot of this demographic is coming to us and asking us for the money, because they walk into the bank and they can't qualify for a line of credit. They're not getting it. So flexible payout options, right? You could take out the lump sum. You have the optional interest only payment if you want to make that.
Yeah. So that's very important. So, and we'll talk about that more when we start talking about the myths
Yeah.
of reverse mortgages and the pros and cons, really.
Yep.
Yeah, you're actually allowed to make interest only payments where it's not affecting the equity other than the current lump sum that you've used off your equity.
Okay. So who qualifies for this?
A reverse mortgage, you got to be 55 years old.
Okay.
You
Primary-
have to have, it has to be your primary home.
Okay.
This could not be a rental,
Mhm.
right? And you have to be making a little bit of income to make sure that the lender feels comfortable with you making property taxes and maintaining the home.
Yeah.
So that's the most important part.
So, okay. So where do you want to go with, like, so primary, and then you got to maintain taxes, insurance, and home maintenance,
Yeah.
right? Those are the 3 things that they're going to look at. So CPP and OAS, if you're heading into the retirement, that is pretty much enough,
more than enough.
more than enough to qualify you. There's no GDS, there's no TDS, there's no stress test.
Yeah.
An appraisal will be required.
An appraisal will be required, and if the lender feels that some renovations are going to be needed prior to, they're going to ask that these renovations get done first.
So you get to unlock the equity in your home to cover expenses, fund home improvements, or enjoy even a better lifestyle. Because as we know, heading into retirement, a lot of these retirees right now are even carrying a mortgage going into retirement, and carrying a mortgage of 200 or 300,000 at 4.5% or 5%. That doesn't, like, your CPP and OAS doesn't make that. Like, I have clients right now where the husband was, you know, he doesn't have a pension because his job that he worked didn't give him one, right?
Yeah.
He could have been a car salesman. He could have been a thing. Now, to take money from your RSPs and all that stuff to give you some return, that's taxable income, correct? The mom is a housewife. I'll give you an example. And they just need to have a lifestyle. And CPP and OAS doesn't allow them to do that. The other one is that they're 55 and they're trying to get there. So to cover the mortgage payment and to pay all the bills and lifestyle, it doesn't work traditionally.
Doesn't work that way.
No. So coming to get a reverse mortgage, you know, you can get the equity or replace what you currently have, and you have no payments, or you can have the interest only payments.
You've worked so hard, you know, purchased your own home, and not to have a lifestyle that you want for retirement is crazy.
Or the other one too is a lot of people don't want to move, right?
Yeah, that was definitely the next topic I wanted to get into.
Like, they don't want to move.
They don't want to move.
No,
they want to enjoy their life. And you should. You've worked so hard for so many years. You've been able to live in this country, and you know what the best thing that's ever happened to you guys is the equity in your home. I can't even say tripled, quadrupled over years,
40
over
years,
3-4 years. It's like you guys just made hundreds and hundreds of thousands of dollars as if you guys were working. Now you have the ability to access those funds.
Yeah.
Right.
I talked to a client the other day, and he's like, Everyone's saying downsize, downsize, downsize. They're telling this individual to downsize. And he's like, Johnny, I built this garden. I have everything at the touch of my finger. I could walk to Longo's. I could walk to the convenience store. Across the street is the garden center. I don't got to go anywhere. Why do I got to go downsize? Why?
Yeah.
Like, I don't want to. I'm retired. Like, first, my father-in-law, okay, I'll give you a prime example. They're the most humble, very easygoing people. And I've said it too to them, like, guys, why don't you, sell and downsize and move and so on and so forth. My father was like, no. He goes, I built that garden in the backyard. I have concrete all the way around the house, okay? So I could walk around the fucking house. I don't want to go anywhere else. I like it here. I got to go somewhere else. I got to do this all over again or find it. So downsizing, relocating, especially, they want to maintain the independence. I don't care what anybody says, right? Like when I'm that age, don't tell me what to do because I want my own independence. They've earned that right, correct? Like I would think so. So yeah, staying in the home longer.
Staying at home longer. Some people don't want to move into a retirement home.
Yeah.
This gives you the ability to stay home for as long as you like.
Free up monthly budget.
Yeah.
Right. Another pro.
Yeah.
Right. So I want to talk about the
100%,
pros. How about tax-free cash?
Yeah. You're not getting taxed on the equity in your home that you're using.
So you could use it now, right? So the
And-
mentality.
And with that theory, you have your children that, maybe you plan on giving them an inheritance when you obviously pass away,
Yeah.
right? There could be implications into that inheritance afterwards where, you can use the reverse mortgage to pass down some money now without those implications.
And watch your kids enjoy it a little bit. Maybe.
Yeah,
What
100%.
What implications?
Well, I mean,
Realtor costs,
I don't know.
selling the house, market conditions.
I don't really know
Those are
how inheritances work. I don't know if there's tax implications. There might be capital gains involved.
That
right?
probably, yeah.
Right?
there's
for
a lot of
sure.
reasons, but I'm
Yeah,
just saying,
but like now you could avoid those capital gains
Yeah.
by,
you
passing
can
down.
tap that equity without having to sell the house, right? Selling the house costs money, right? And those are facts, right? You got to pay people to sell the house. You got to move, which is another expense. You got to pack everything, which is just, listen, guys, Danny and I have been working on a project for a number of years with Move Central, right? With one of the benefits of that system is that the transition, moving is a transition of life. And it's probably the most stressful thing you can do. And that's why a lot of these people are now looking at a product like the reverse mortgage because they don't want to move. They don't want to downsize. They want to be able to access that money to enjoy life.
Yeah.
Right. And that's where I was getting at. Moving is crazy. Who should consider this? Like who are we talking to right now? Like if you're listening to this episode, it's because you should be
55 years or older.
You have a fixed income.
You have a fixed income?
Yeah, fixed income. Like your income is fixed. That's it. There's no fluctuation. You got no investments.
Also, this is not for entrepreneurs then.
This is for retired individuals.
Only retired people.
The reverse, yeah, you have to be 55 or older.
Okay.
55 or older. The older you are, the more equity you're able to access in the property.
And without taking on other new debt.
Okay.
Right? So taking on unsecured lines of credit, utilizing credit cards. I can't even tell you how many files I have with individuals that are over 55 and 60 that have accumulated consumer debt on credit cards and lines of credit, where you can use your equity to enjoy life instead of having to charge it.
Yep.
Right. That's who this is for. Homeowners with high equity.
Oh, that's for sure.
Right. So the ideal for those who have significant equity in their homes, but want to improve their cash flow. Okay. That's who this is for. Individuals who want to age in place. They don't want to move. They don't want to go anywhere.
Yep.
Those who prefer to stay at their home rather than move to a retirement community. Like, let's be real. Like, who wants to go to a retirement home? I would, right? I wouldn't want to do that.
Another, I guess, really big thing is the flexible payment options, where funds can be received as a lump sum.
Yeah.
It can also be received in monthly payments.
Well, because they want to plan an inheritance. You want to plan a living inheritance, right? That's what you were talking about earlier. So
Yep.
planning inheritance while you're still living, not inheritance when you die. Homeowners who want to help their children financially now rather than later.
And then there is obviously there are some drawbacks,
Yeah,
right?
there are.
If you decide not to make an interest only payment, the interest would be accumulating.
It's accrued interest. Right.
There are some fees, and obviously there's some fees and costs, but that goes with any mortgage, and they're
It's
actually
not
pretty
free.
light, right? There's not. I mean, with any mortgage that you get, there's going to be fees. There's going to be lawyer fees. There's going to be appraisal fees. So there are some fees that are here. I mean, and then there's your impact on inheritance, right? By getting a reverse mortgage, your equity starts diminishing, so there'll be less available for inheritance.
Because you're using the money now.
You're
But
using the money now,
But that's either the benefit of why you're using it,
100%.
right, against why it's being used later.
So let's talk about some myths.
Yeah. So myth buster number 1. Ready?
The bank takes ownership of your home.
False.
Okay.
False. 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 You remain the owner.
You will always remain the owner until you pass away.
Yeah.
So, or you decide to sell for sure.
Okay.
Okay. Homeowners. So here's myth number 2. Homeowners can be forced out of their home. Johnny?
Homeowners can be forced out of their home.
No, you can't. False. As long as you meet the terms, you stay in the house.
Exactly.
So
So
the terms are property taxes and you maintain the house in good condition. You can't let the house fall apart.
Right.
But that's obviously there's rules to this, right? So as long as you meet the terms, you stay in the home.
reverse mortgages are only for financially desperate.
So broke people.
Yep.
And that's false too, because many use this strategy for financial gain.
Yeah.
You could use this. Listen, if you're, I know people that are 65, they've worked their whole flipping life to pay off the mortgage. So they paid it off. And now it's like, well, I want to do the one home away,
Yeah.
right? So I want to go buy an investment property, but I can't qualify at the bank. Well, guess what? This is a great tool to use to create wealth, or it's a way to give to your kids so they can create wealth. So it's not for broke people. This isn't for if you're stuck. This isn't for if you're in trouble. Financially strategic people, anybody use it. If you have the right people, like brokers like us, you can build wealth with this product.
Yep. And I guess the next myth here is homeowners or hires could owe more than the value of their home.
So first of all, there's a clause inside the reverse mortgage that needs to be addressed, and it's called the non-recourse loan. Okay, which means that when you take on a reverse mortgage, the max loan amount is like 55% of the house value. So they're leaving 65% of the value, or 45%, 45% of the house's value, excuse me, inside the house. Okay. So now I want to talk about, can I dive into this for a second real quick?
100%.
So the long-term yield on the reverse mortgage against the cost of borrowing, and the long-term yield, right, the curve on the house's trajectory to grow in equity is a lot stronger than what the cost of borrowing is.
Yep.
Okay. So even though the accrued interest on the reverse mortgage might be right now in today's market significantly a little bit higher, the curve, the yield curve for the return of investment on the growth of that property historically will outpace the cost of borrowing. If I said that correctly, I practiced that all morning. I swear.
But what if the market takes a dip? Like now you have less equity, or now you might owe more than what the value is of your property. If you pass away, do you owe that back? And it's no, you don't. You will only owe the value of your property at max. They won't be coming after you for anything more. So if that were be the case,
There's this whole myth because of I think it was in the 80s or the 90s in the United States,
In
the
the
chip
United
reverse
States,
mortgage,
yeah.
they didn't have this non-recourse loan effect in. So this clause allows the homeowner to maintain the home, to maintain ownership of the home. If the accrued interest reaches higher than what it is, that's the max is the max. That's it. So no. So how is repayment? Repayment is if you sell the house, you move out permanently, or you pass away.
or you pass away. Yeah.
The home is sold, loan is paid off, and the remaining equity goes to your heirs. How do you say it?
Your hires.
Your hires?
Your hires.
Heirs.
Heirs.
Hires.
Hires.
Okay.
Hires.
Heirs, I think.
Heirs?
I think so. Yeah. So
I love you, Danny.
Yeah, that's okay.
here's a couple real stories I just wrote down for us.
Yeah,
Just to give
for
you some. So Mary and John used a reverse mortgage to cover medical bills and fund renos. They stayed in their home, and they even helped their grandchildren with tuition. I got another client, Judy. Okay, it's not on my list, but Judy. Okay, her grandson wanted to become an entrepreneur, and he wanted to do some Amazon buying on products. The parents were so against it. The parents are blue collared workers. They were like, no, 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 no. So she's a widow, right? She's in her mid 70s. And she's like, Johnny, my grandson really wants me to give him some money. I don't want to take from my investments because I don't want to break my stock bonds or mutual funds. She goes, can you get me $100,000? I said, absolutely. But I don't work. I don't qualify. I was a stay-at-home mom. But I want to help out my grandchild. I believe in what he's about to do. I think he's very smart. I gave her the reverse mortgage. Do you know what that kid right now is doing a month in business? $30,000 a month.
Oh.
Yeah, he just bought her a car.
No.
Okay, and he's doing really well. He has a system. It's working, and it's there. So I didn't write that one down, but I just thought maybe that would be an inspiration. Susan, a widow, added monthly income to her pension, giving peace of mind to her independence. Okay, a widow. And that happens at any moment. Tom and Linda gave a living inheritance to their kids. Help them with a down payment. So, guys, if you're curious about how the reverse mortgage can fit into your retirement plans, let us know. You need to get a professional assessment. If you're getting denied at the bank and you need money, if you're drowning in debt, let's be real. Like, there's some people who use lines of credit and unsecured loans to have a lifestyle. That's one. If you want to travel the world, reach out to us and secure your retirement. Take control. It's your money.
Yeah, it's your money.
Yeah.
You deserve it. You've worked all your life for it. You should enjoy your retirement.
The reality is you remain the homeowner. The chip reverse mortgage has a non-recourse loan. Many financial savvy retirees use this strategy to gain wealth, and you can give money to your kids and you can watch them enjoy life a little bit. So that's really what it is. So,
There you have it.
I was trying to read one more thing.
Get it in there, Johnny. Get it in there.
So while the current market might look uncertain, the long-term historical growth on real estate generally will always outweigh the cost of borrowing on a reverse mortgage. Look at any graph. And if you want us to show you, reach out to us. You could find us here at Your Nesta Financial. We have a website. The website is called
equityretirement.ca.
equityretirement.ca, where you can find all the information in regards to reverse mortgages. You can set up a one-on-one or discovery call with myself or Danny.
Or one of our reverse mortgage specialists.
Yes, we have reverse mortgage specialists as well. Guys, you can find us at On the Couch Podcast 23 and all streaming platforms. You could find me at Your Nesta Financial. And Danny?
Mortgages by Danny C.
Until next time, take care.
Brush your hair.
See you guys.